Hello everyone. Welcome to this course series on Kingdee AI Suite. In this session, we will focus on accounts payable. We will explore the content in 4 parts: product concept and architecture, key concepts, business process flow and highlights, and core features. First of all, let me introduce the product concept. This application is designed as an automated, integrated, and transparent accounts payable AP management solution. It supports automatic offset processing by association or core document number. It also supports automatic accrual accounting when purchase receipt documents or inspection documents are approved in the supply chain. This significantly reduces manual workload and minimizes human errors. This application is integrated with the supply chain, payment, invoice management, general ledger, and tax solutions, enabling integrated services for business, finance, and taxation. In addition, the system provides multi-dimensional accounts payable data and duplicate payment alerts. These features help enterprises identify cash risks, better manage payment terms, and improve the cash utilization efficiency. Let's take a look at the product architecture. It mainly includes basic data settings, initialization, daily processing, statement inquiry, and period-end processing. Daily operations focus on 2 core documents: accrued payable and accounts payable. Along with these documents, offset is also a key part of daily operations. These are the key concepts. Offset refers to the process of offsetting accounts payables. For example, when an accounts payable has been fully paid, the system performs automatic or manual offset between the accounts payable document and the payment note. This consumes the accounts payable balances. If there are other concepts you're not familiar with, you can pause the video, take a moment to review, and then continue with the rest of the course to better understand the upcoming content. Next, let's briefly walk through the purchase process. During purchase receipts, if the invoice has not arrived or automatic accrual is enabled, the system generates an accrued payable document. The system performs cross-check between the accrued payable and the purchase receipt. Once the invoice is received, the purchase receipt document is converted to an accounts payable document. If an accrued payable exists, the system automatically reverses the accrual. When the payment term is due, the accounts payable document is converted to a payment note. Offset is completed, and an offset record is generated. Now let's look at the key features of this application. The first one is purchase accrual account. When goods have been received, but the supplier invoice has not yet been obtained, the system records an accrual. When the invoice arrives, the accrual is converted to an accounts payable document, and the accrual is automatically reversed. The reversal document records cost variances and affects inventory cost. The system supports both same-source reversal and associated reversal modes, and also supports automatic accrual. The second feature is multiple offset modes. Scenarios of offset vary widely, such as payable to payment offsets, write-offs, and payment refund netting. The system provides multiple offset methods, including automatic, manual, rule-based, scheduled, and import offsets. Association-based auto offset means the documents have a direct linkage, such as a payment note generated from an accounts payable document through conversion. Auto offset by core document number means, even without an association, documents with the same core document number will still be offset automatically. The third feature is invoice adjustment mode. If a variance is found after the accounts payable has been confirmed, the system automatically generates an accounts payable adjustment document during purchase invoice approval to ensure the accuracy of accounts payable. The fourth feature is period-end foreign currency revaluation. For foreign currency transactions, the book value of accounts payable must accurately reflect exchange rate fluctuations. At period end, the system automatically calculates unrealized exchange profit, loss, adjusts the AP balance accordingly, and then automatically reverses the foreign currency revaluation in next month. The fifth feature is debt transfer. Through AP write-off transactions, enterprises can transfer accounts payable liabilities from the original entity to a third party. Debt transfers can be processed by supplier, project, or a custom dimension. The sixth feature is accrual offset. In some purchase scenarios, accruals are created before invoices are received, but the accounts payable documents generated later may be imported or manually created. In this case, there is no association between the accrual and the accounts payable document, so manual accrual offset is used to complete the financial reconciliation with the accounts payable. When a purchase transaction occurs, both parties usually agree on a payment schedule. Through the configuration of payment terms, the system automatically generates payment schedules on the accounts payable document. The due date can be calculated based on transaction date, month end, and fixed date, and payment planning schemes can also be used to generate schedules by different dimensions. If goods are received or accepted before the purchase invoice arrives, accrued payable documents can be used for accounting. The system supports standard purchase accruals, expense purchase accruals, service purchase accruals, expense AP accruals, and other accrual scenarios. One important point is that expense AP accruals can affect inventory cost and are often used to accrue expenses incurred during purchase or sales, such as freight charges. When the purchase invoice is received, the actual accounting is confirmed through the accounts payable document. The accounts payable document is the core document that associates purchase invoices and payments, and it can inherit payment schedules from source documents such as purchase orders. When an AP needs to be paid, simply click the Pay button to process the payment. Once the payment document is confirmed, the system automatically performs offset processing. For documents that are not automatically offset or not included in scheduled offset processing, write-off is typically used for debt transfers. The system supports transfers by payment schedule line and by multiple dimensions such as supplier and project. If errors occur in earlier transactions and reverse closing fails because the period is already closed, the reversal function can be used to offset accounts payable and release the associated accounts payable quantities on upstream documents. After accounts payable are confirmed, if adjustments are needed due to rebates, discounts, or similar reasons, you can process them using the accounts payable adjustment function. All offset activities can be centrally managed through the offset workbench. Please note that some offset scenarios cannot be processed manually, such as retention money and write-offs, which only support automatic offsets. When manual offset workload is heavy, scheduled offset can be used to complete batch offset processing efficiently. The manual accrual offset workbench allows you to manually offset accrued payables against accounts payables. It also supports positive and negative offset as well as accrued payable cleanup. For foreign currency transactions, unrealized exchange profit loss can be calculated by using the period-end foreign currency revaluation during period-end closing. This concludes the introduction. Thank you.